We don't have a mutual fund sahi hai equivalent in insurance yet, but there is very strong guardrails. A lot of consumers like me and you actually trust our agent to tell us, educate us about the product. Consumers trust the agents because they feel like if I buy whatever from this agent, I know that my claim experience will not be bad. This guy will take care of it.
The other point that your survey shows up is that only 35% of customers remember the name of the insurer.
People don't know because the insurance was delivered by the agent, the printout got kept in a car or a two-wheeler or whatever the case may be. And they just don't remember who they bought from.
Do you think we need to do more, or insurance companies need to do more?
We need to definitely do more. Insurance companies need to understand consumers better and find a way to target them, through value-added apps.
Hello and welcome to this special edition of the Core Report. I'm in conversation with Madhur Singhal, co-founder of Praxis. Madhur, so we're going to talk about insurance, and let's start with motor insurance, or the insurance that we all buy for our cars and two-wheelers and so on. One of the findings from a report that you've done and a survey that you've done in the report that you've released after that is that the churn is over 50%. That means half of us are changing our service provider. Now, obviously, that leads to several questions. One is, of course, the broader question, why is it happening?
Yeah. So it's nice to do this, Govind. Yeah, so we recently released this report around general insurance, mostly focused on motor and health. You're absolutely right. A lot of us are, changing our insurance providers. Sometimes we don't even know that we have changed the provider because we're a very agent-driven, intermediated market, as we call it in the insurance parlance. It's not a bad thing because insurance is a complex product. Our report also talks about it. A lot of consumers like me and you actually trust our agent to tell us, educate us about the product, talk about the features, tell us what product we should buy, and then also service the product, in an unfortunate event of a claim. But what that leads to is the channel basically takes the decision, and the channel sort of owns the brand. And the insurance providers do not really have a very tight relationship with us as consumers. And so it is inevitable, till the consumers become knowledgeable about these products and are able to take calls and decisions about what product they want to buy. And till the consumers are able to distinguish between the insurance offers, like for like, we will continue to be an intermediated market, and we will continue to rely on agents, and we will continue to, unfortunately or fortunately, have churn in our insurance providers because we keep jumping to the next best offer available for that year at that moment of time. But then 2 years later, we might be back to our old insurer because that offer now became better.
Right.
And fortunately, the offer is being communicated to us by the agent and not by anybody else.
So let me look at it from the other side. Does this also mean that most of the products look very similar, which is why, in a way, it's easy for consumers to make those switching decisions?
It's a great question. See, I think, if you look at literally any industry in India since independence, as consumers latched onto categories, the number one thing that, and insurance is a very regulated space, number one thing that the regulator wants to do is to avoid mis-selling, right? And especially there is money involved. There is a bit of a financial decision involved. And, even though health insurance or a motor spend might be howsoever small depending on your coverage, the damage it can cause to you if you take a wrong decision is actually very big. So the market is going through this rapid penetration growth phase. And in this penetration growth phase, the need to educate is very strong. And from a regulator standpoint, the need to stop mis-selling so that there is genuine chance to pay for penetration growth. We don't have a mutual fund sahi hai equivalent in insurance yet, but there is very strong guardrails to say what should the product construct be. In fact, IRDA another, regulatory, quasi-regulatory bodies have defined some of that, and all these products undergo approvals and so on.
You use the example of mutual fund Sahi Hai, which is obviously to sell the concept of mutual funds. And that was also at a time when people were not really buying mutual funds. Now, of course, it may almost be the opposite, where you want people to moderate a little bit. But in this case, insurance is mandatory.
Yes.
So that is not the issue. So what is the education that could be done?
Insurance, only the motor insurance is mandatory.
Yeah,
the health is not.
Since I started with motor.
And even in motor, you're absolutely right. See, motor also now has this whole concept of OD and TP. I can tell you more than 80% of the consumers who are taking motor insurance would not know whether they have OD or TP or both. A lot of them might not even have heard of these terms.
Yeah, can you define that?
Because when it's sold, it is sold as a part of the cost of the car. In some cases, the dealers pay for the first year's insurance. You're not making a conscious call. Insurance is necessary. You get the basic minimum insurance that is needed, right? Now, OD is own damage, TP is third-party damage. These concepts are fairly well known outside India, especially in developed markets like the US. But in India, this bifurcation started only a few years back. Earlier, 5 years back, we only used to have a motor insurance. That's it. And now the OD and TP coverage is being different. And some of them are mandatory. And also, according to law, some coverage is mandatory or is bought, initially itself for a few years, while the other is actually discretionary. All of this is not known. In fact, a lot of people get surprised, and the auto dealer has to educate them to say, you need this, otherwise your A, B, C type of spends will not be covered, or these kind of damages will not be covered. Also, even on the OD and TP, there are multiple variants. Do you do zero depth? Do you not? Do you have consumables covered? Do you not? Do you have plastics covered? Do you have consumables and other parts covered, but on a depreciated basis versus not? Right? All of this, makes insurance complex. And the problem is not that the product is complex. Actually, people can understand the product. When they're buying it, insurance is sold along with a much bigger check that they are writing, which is the car or a two-wheeler.
But that's only in year one.
Only in year one. But then year two, the dealer calls, you try to, sort of shop around a little bit. But the real comparison, that's where either an agent comes in. In case of motor, it's the car dealer who then starts to play a more meaningful role to actually explain the insurance product to you. For the first year when you buy a car, or a two-wheeler, it's insured and you just go to the dealer because the insurance is bought by the dealer. But after that is when the complexity starts.
So the other reason is also that people are looking for that smallest discount or variation in price.
Yeah.
And that's why they shop around.
Actually, that's not always
you're
the
saying
case.
It's not the case.
No,
Okay.
That's not the case, interestingly. See, India across categories, and especially when it comes to financial products, people make value-based decisions. And the other factor that comes into the picture is risk or psychological safety. If you got an insurance where you know that the claims experience, if there is a need to do so, is going to be very good, you would not mind paying 150 rupees or 1,500 rupees extra. If an insurance was if you bought a luxury car, insurance is more like 65,000 rupees, 65,000 versus 67,000 for, better claim experience, better trust, better reliability. In fact, our survey has come out saying consumers trust the agents because they feel like if I buy whatever from this agent, I know that my claim experience will not be bad. This guy will take care of it. Okay. We are not always buying the cheapest insurance.
Okay. So, and sticking to the intermediaries or the agents for a moment, they are incentivized by the same insurance companies.
Correct.
So therefore they are, stacking up or looking at one insurance incentive or incentive from one insurance company versus another one.
Yeah. So this is a little bit of a vicious circle. Like, look, there is regulation to say a certain insurance agent should not be selling, more than two insurance providers. But in reality, they do, or they end up doing it in a pseudo manner because they would have these, licenses and names of their family members and so on. I think that's not the point. The point is the vicious circle, which is something that the report has spoken about. That, different insurance companies are at different phases of their growth and have different aspirations on how much they want to grow in a certain year. Because the market is so dominated by intermediaries, You go to agents and give them incentives for sale, right? You give them, flexibilities on what they can discount or the commissions that they can get, when they sell, the tie-ups that they are doing. And so the insurance agent, the priorities for the agent keep shifting, right? Today they want to sell a provider X. 2 years later, they want to sell a provider Y because the incentive or the commission structure became far more important. Now, not to say that the agent is compromising consumer interest, but all things being equal, and in any case, agent being the first and the most reliable port of call, can always push another insurance saying, I know you as a consumer, I know the underlying asset. I think this insurance company, what is selling is ready to give this to you for 1,500 rupees lesser, while in reality, the insurance company made much lesser money and the agent still made a much higher commission, despite the consumer having paid less.
It's also a symbiotic relationship, I'm assuming. You cannot do without the agent.
Absolutely.
And working with the agent also has some disadvantages. The other point that your survey shows up is that only 35% of customers remember the name of the insurer. Now, these are prominent names. It could be an ICICI, HDFC, Bajaj, brands that are well known across the country, across the board. And yet people are not able to remember or distinguish. Why is that?
People are not able to remember the insurance they have. If we ask them, tell me top 5 insurance providers in the country, the HDFC Ergos and ICICI Lombard and ICICI Prudential, if you're talking about life insurance and so on, would come in. But, which insurance do I have is something that people don't know, because the insurance was delivered by the agent, the printout got kept in a car or a two-wheeler or whatever the case may be. And they just don't remember who they bought from. Also, people have if you have multiple vehicles, you have multiple insurances, you have something, nobody is attached or loyal to a provider. And so you don't know what you bought from where. Like if I asked you, fairly educated individual, tell me what health insurance if you've not taken a claim in the last 6 months, unlikely you remember which insurer it is.
I just about remember. Yeah. I just about remember. Yeah. Okay. So you're also saying that insurers who deal directly with customers perform better and they're profitable, deliver higher returns and so on. Yeah. I'm sensing that this is an aspirational goal rather than the state of affairs.
You are right. It is a bit of an aspirational goal, but it's also a bit of, like if you look at some of the D2C providers, right? Look at ACO, and what they have done. In their own right, they have created a right to play, to create direct distribution. There are people, I can show you somewhere just today morning.
But they're also a distributor. It's just that they're a digital one, isn't it?
They're not. They don't sell third-party products. Okay. It's their own manufactured insurance. So it's their insurance. They're an insurer, not a distributor. So okay. What you said is, and so I think there is some emerging proof that, brand equity can be built and direct channels. They tap the direct channel.
So let's take the example of an HDFC, a brand I know. Yeah. So you're saying if an HDFC sells directly from its website, then, but what stops it? I mean, I know they're trying all the time, but they're not able to, or they still have to fall back on intermediaries.
You see, activating the direct channel needs investments in the direct channel. You need to produce content on the internet. You need to have the right digital marketing and advertisements, not just for your insurance, but also for the channel. You need to talk about differentiation in the product. If you look at it again, we talk about ACO, they'll be talking about, there is a very clear differentiation that they talk about in terms of claims, in terms of speed, in terms of reliability. You have to be ready to do that. If you do that, there is no reason why you will not keep going back. It's the industry that I feel was very similar in this respect was airlines, where you had the GDSs and then you had the travel agents, and you will just go to the travel agent because it's just easy to book a flight ticket. You could have, very well that you can go to the airline portal, but you just don't know which insurance to pick. You don't know how to compare it. A lot of even the name that you took, if you go to their website, can I compare products? Can I compare it with other products? Can they pull pricing data from third-party aggregators and distributors or even, sellers like Policy Bazaar and help you compare, saying this is available 10% cheaper? If you look at airlines, when you're buying from the airline, there is a guarantee saying if you found this cheaper on an OTA, we refund you the difference. Just imagine the trust quotient that this will do, and it will make you actually go to your provider, because then that I don't need to discover price. Today you go to the agent to discover the product, and you go and the price, and that's where it breaks down.
There seems to be a dilemma here, because then you're saying that the insurance provider should try and compete with price.
It is not about
by
just
demonstrating the price.
No, also compete on value, right? You might be 10% more expensive.
No, I'm just thinking of the from the CEO of the leadership team of that insurance company.
Yes,
they'll say that we cannot make that mistake of being compared on price because we have all of this to offer.
Actually,
I'm asking.
I think that is rhetoric. The ability to change pricing for an insurer is tough, right? Because look, they are fundamentally insuring a non-standard product. There's a car, there's the age of a car, right? It's an accidented car versus not how many kilometers. So actually, you can run a pretty sophisticated yield or pricing model. Most of the countries like US now have what is called as a PAYD, P-A-Y-D, pay as you drive. That's like the next level. But even if you just said, I want to look at Govind and his driving style and his car and his habits and his claiming, history, and can I offer Govind a slightly better deal? Because look, he's a pretty disciplined driver. Today, like, how do you do it? Agent is not passing on. Agent is not a wire media to enable better pricing. I think if insurers opened up the channel more, they would actually give themselves an opportunity to price better, right? But today that opportunity is not there.
And the technology exists. So why are we not able to, at this point, do this kind of more smart selling basis the user's behavior or past behavior?
Very interesting point. Let me tell you something that you might not know. A lot of the insurers in the country don't even know who the customer, who is the customer who they sold the policy to, right? That information comes masked. The agent owns the customer, and the agent sort of owns the code. A lot of insurers I speak with, this is a problem. They don't even know who they insured. So if I don't even know who I'm dealing with, how do I price?
But that, I'm assuming, is a regulatory intervention, which must be there in other markets as well. Or is it only in India?
I think it's an India phenomena. See, India phenomena because we insure the asset. In all other markets, so most of the other markets, you insure the person, right? Here we insure the car. There's actually, no reason why every car driver needs to pay the same insurance on if you had the same underlying car.
So is that a matter of sort of reform of insurance?
I think it's going to come. It's a big reform, but definitely I think it needs the industry participants to get together and try to seek control on pricing. And trying to change the game a little bit, or playing field a little bit, to say, look, I want to assess risk better. Figuring out the car model is not the risk. The risk is on the driver of the car, but we don't have that yet, and that needs it's a very big change.
Right. And since we're talking about the individuals behind the wheel, let's talk a little bit about health, because you said general is what you're looking at. So, how much of all of this applies to health, or is it almost the same thing?
Interestingly, no, it is not almost the same thing. The dynamics of the agent, I think, are almost the same thing. The thing around claim experience, health is actually a more complicated product than motor, right? It's also a more personal product than motor, because, you are still being insured, and, what are the pre-existing disease conditions, what are the limits you have on rooms and hospital network and whatnot. It's actually truly a more complex product. And that truly more complex product, a lot of us don't even know what to look for until we ran into that fine print on a claim, and then we realized, oh my God, I needed to have looked at this better. And next time I renew, I need to make sure that room capping is this, or hospital network is this, or a pregnancy is covered or not, or IVF is covered or not. Oh, dental OPD, I could have gotten 10,000 rupees. Right? So health is genuinely a more complex product. It needs intermediation. I don't think, only a very discerning buyer can go direct. Not to say that insurers cannot create direct models. Players like Acco do, but it's a more complex product. So the agents need to be able to explain the product, the inclusions, the exclusions. And I think the insurers need to do their bit on their websites, on their platforms, with influencers and so on, to educate the customers on what 10 things to look at. So we do need a mutual fund sahi hai equivalent, so that the product is dumbed down and consumers are are discerning enough to make their financial decisions themselves.
And people, there's a lot of word of mouth that goes around in health, and a lot of it is to do with what experience did someone else have when it came to claims, and whether you have a sense that claims are, done on time at the hospital, and so on and so forth. Is that the main reason that causes people to shift in and out? Or?
It's a very interesting question. The word of mouth is about the agent, rarely about the insurer.
Interesting.
Sometimes, a certain Apollo Munich, came up with an Optima product or whatever. There might be some word of mouth that should have gotten generated to say, hey, you know what, these guys have an amazing floater policy. It sort of tops itself up. I can use it 3 times over, 2 times over in a year. But, actually speaking, the word of 90% plus word of mouth is about saying, that agent is actually a great agent. We did the insurance through him. We got the right, him or her, we got the right advice. And, when we had a claim, it was seamless. It's actually very rarely about the products. It started to happen now for high value products, but bulk of the insurance that is sold in India is the 2 lakh to 5 lakh, coverage. And that product is fairly vanilla.
And a lot of it is sold to companies and their employees.
That we're not even talking about. That's group health. We're talking about retail insurance that is about group health goes through a very different dynamic. Actually, that proposition for the customer is outstanding because it's like it's bought as a group, corporates negotiate hard, it's intermediated through brokers, while, a lot of the individual health plans are actually sold through individual agents.
Right. So we've talked about both motor insurance and health insurance, and you've given us a sense on what individually as products work and why they don't, and who's really responsible for the distribution and growth of that category, or rather both categories. Now, if we were to take a step back, tell us about how you see this industry growing. What can we learn, or what, to the extent we should, from other markets? And what do we need to do to maybe ensure that it's more mature and more people? I mean, I guess we all agree that more and more people do need health insurance.
Yes.
I mean, the government has its own health insurance policy. There are private health providers. So we do definitely need more health insurance. And motor, of course, is mandatory. But overall, what do we need to do to improve our, let's say, the understanding and the dissemination?
See, interestingly, from a consumer perspective, the penetration has been growing. I think the IRDA is doing a phenomenal job of playing a very developmental role to the growth of the industry. I think the insurers are doing a great job now, populating and pervading the proposition and the fact that you need insurance, and then, upgrading consumers to better insurance. So I think we are on the right track already. I don't think there is too much external intervention needed. Beyond, of course, you could always sell more, market more. I think targeted campaigns around insurance, and then the government schemes, especially there are several Bima Yojanas and health schemes which are available to consumers in India because subsidized by the government. I think if you included the government schemes, actually our penetration is not bad. Yeah. So
it's the largest general insurance scheme in the world.
Exactly, right? So it's actually, the problem is not the penetration. I think the problem is that from an insurer, from a supply side, the insurers are running like investment companies. Right? We typically, when we look at an insurance company, we split their business or the profits that they generate into sort of what they earn from underwriting a risk on the insurance versus what they earn from investing the premiums that they get, because everybody's running an actuarial book and they're trying to manage risk at a portfolio level and cohort level and so on. The problem is that if the insurers start to focus on underwriting as a profit driver. Today, underwriting is making a loss. In our report, you see in the US, it's the opposite. They make more money on underwriting, less money on investment. In India, they're making more than their profit on investments so that they can more than make up for the loss they are having to bear on underwriting.
But that's because the markets have been...
but it's not the market, because underwriting is still... In fact, then it should have been the other way around, right? If the markets are weak, investment income should be tougher to generate. Yeah. And underwriting income should be easier to generate. But unfortunately, despite that, it's not happening.
So what else do we need to do to... You're saying the growth is fine, yes, and it's incremental and so on. But in terms of value, for example, or in terms of, let's say, add-ons, which could actually make my life simpler, suppose I were to have an accident or whatever, From that point of view, do you think we need to do more, or insurance companies need to do more?
We need to definitely do more. Insurance companies need to, understand consumers better and find a way to target them, through value-added apps, through giving additional utilities. If your health insurer gives you additional utilities and a coupon booklet, that's a great way for you to track the consumer. If for an insurer today, that's not happening. Also, the insurers, need to start engaging with the consumer. Like, my insurer has never reached out to me saying, hey, you have a great policy, which means I can afford it. You don't have a CIP, a critical insurance plan, a critical illness plan, and the critical illness plan, covers these types of cancers and what these kind of disease. And by the way, you have a family. We know that because you're a family floater. How about your wife? You at least know what her age is, right? How about this sort of special product or top up that we have for women? Do you want to take it? And by the way, if you buy it for the next 10 years, you know what? I can do it at like half the cost. But look, 10 years, suddenly you turned a 1 year or a 2 year insurance product into a 10 year sticky top up. And if I have that top up, my likelihood to renew with the same insurer is high. Now, none of this happens. You've been a consumer of this, I've been a consumer of this, none of this happens. And the agent is not doing this. In fact, one of the things that we saw in the report very interestingly is that consumers are saying, I trust my agent, but I meet with my agent only upon renewal. I'm not talking to the agent about insurance cover, before the renewal period hits. And I think that's what needs to change.
Right. Last question. So you've obviously studied this as a consulting firm and for a client or maybe a set of clients. What is your advice been after doing all of this to them?
So our advice to insurers, and we're not biased to a client. I think we do a lot of work with insurers across the board. I think our advice is that there is no 1 or 0. I think the intent here is to appreciate the direct channel and double click on the direct channel, because, every provider, not just an insurer, you need to own the customer. And you've been growing at the back of, or you've been growing with this compromised position where you don't always own the customer. You need to do that. In the upcoming digital world, which is all powered by AI, where cross-selling is possible, where yield management is possible, if cultivating a direct channel is key. That does not mean that you deprioritize agents. That does not mean, in fact, there is a case to have better agents, educate agents more, not missell, etc., etc. There is a segmentation in agents you need to do. So this is not an either or. But exactly like what an Indigo thought of 10, 15 years back, saying no direct channel. Direct channel started with 10%, 18%, gone to 50, 55%, because, now in an oligopolistic world, we don't have much choice anyway. So, I can, go to a certain airline. Airlines used to do loyalty programs. None of the insurers have any loyalty programs of any sort. Leave aside, coupons or other things. So I think, the industry has gotten to a scale where this consumer activism needs to start. And that was our advice.
That's a good note to end on, Madhur. Thank you so much for joining me.
Thank you, Govind. Always a pleasure.